Welcome back again here this week. If you've been following me on social media, you kind of had a little bit of an inkling of what was going to take place here maybe this week here. Now, I have been saying, even on the last few weeks here of these commentaries, is that you can't be complacent in markets like this. You can't always be a bull, you can't always be a bear. You got to really focus on those fundamentals, the technicals, and try to make some logic sense of where we're at in the trade, where we're at in a chart pattern, and obviously those who have worked with me in the past, either on the hedge side or have listened to commentary for years, is that obviously I'm much more technically focused. Again, there was some indications of this type of move that was going to take place. We just didn't know when. And I remember the last couple of weeks, I've been saying you're going to come in here 1 week and you're going to see this market down hard. Well, so far we're about a $1.30, $1.20 off the highs on the May beans. Corn off the highs by about 40 cents. Now, it was an ugly day. There's no question about it. I'm not going to try to make light of it and say I told you so. I don't do things that way. I want to give you an honest perspective of where do we go from here, and where do we go into next week and maybe the months ahead here. Let's start with corn here. So on the March corn, very, very interesting trade to say the least today. But what's interesting to note is the volume. We traded roughly 260,000 contracts a day. That's one of the higher volumes we've had going all the way back to November, really. But I think if you take a look at how we traded and you look at the big sell-off here, let's take that volume away from here a second here. We had this pattern in place where it somewhat looked like a bull flag, where you have a flag pole right here, the pole, and then you have the flag. Well, what's interesting about that is this is on a daily look. We took out that daily trend line. That's not good. So if we took out the trend line, we were looking for a pullback from this base low to this high. You would see a pullback between 50 and 62% retracement. That is what's highlighted in blue here. We blew past that. And not only did we blow past it, we took out basically the flag support. Now, we're finding support right along that where we should find support and where we settled today. We should find support back at where the next resistance is. Well, that'd be somewhere around that $5 mark. You can see the resistance, you can see the support today, but what's going to be interesting in the days and weeks ahead here, this corn start to recover. Now, maybe it does happen under the March. Maybe it's the May. Maybe it's the July. Keep in mind, it's only January 22nd here. So I do look for some initial support here between this $5 and $4.90 level. What gets a little scary for me is if you start getting below this area right here, there's just nothing below here to stop it from lower levels. So is it possible this thing could sell back to 440? It's possible. I'm not going to rule it out, but it's going to be a trade that's going to be quick, and it's going to reverse quick, especially if you run into weather. Now, I want to switch over and look at the drought map in Argentina. I want to focus, because this is the focus area, I think, where the concern is. The big kahunas, Buenos Aires, Cordoba, La Pampa, Santa Fe. Here's Buenos Aires. They're looking all right. It's the stuff north of it. So the big key growing areas of Argentina are going to be right here. Is in this ballpark. That's the big. That's where the Iowas, the Nebraskas, the Minnesotas, the Illinois of the world. This is where they produce a lot. So we gotta focus on that prospect of continued dryness in Argentina. Does that lead the way into some support levels as we go forward on some of these chart structures? And if you look at where the big kahunas of Argentina are, their dryness is starting to, maybe alleviate a little bit. But the crops right now from the from the contacts I have in Argentina, they're looking pretty good. And I asked them just last night, Thursday evening, um, where are you at on like a scale of 1 to 10? Where's your crop conditions at? And right now, corn, beans are both between that 7 and 8 on the rating scale, 10 being the best. They look good right now, but as a lot of producers know, crops can look good in August, but if you don't get that rain to finish it out, it can go south in a hurry. So do we look for some support here around $5 to $4.90? Absolutely. Here, am I stepping in and buying these levels? Maybe not on the front month yet. Maybe on the December, I'm stepping in here. Maybe look try to nickel and dime that thing around that 430 level. But front month right now, I gotta be very, very patient here. I want to see what happens Sunday night into Monday. Do we gap lower here? Because we did settle down 23 and a quarter at $5.50. Do we gap lower? Big question moving forward in the Sunday night. Now, if we transition and look at the March beans, let me bring up the 4-hour chart, which I've been focusing on quite a bit. A lot of you guys maybe have seen some of this on social media, Twitter, and the thoughts really haven't changed here. So this trend line basically, which started in the early parts of November, it broke today. That, to me, not a good signal. And you guys probably wondering, what's all this purple and red here? So the purple is going to be a Fibonacci extension. The red is a Fibonacci retracement. And that retracement is basically from this low back on December 2nd all the way to the recent high, around 436.5. So again, like the extensions, the retracements can give us a little bit of a guide of to where these prices may go in the days and the hours, weeks ahead. So right now, you look at where the sell-off today took place, and we really, really needed to hold this 1324 level. That's a 38% retracement. This was a key level here as well. This is where the base support really was happening here before we made that new higher move to those new levels above 14. It acted as support here earlier this week before we had that, I believe this was Thursday, before we made that run up towards that 1389 level right here. So 1389 was a level that was very, very important. It broke. You look for the next support. It held, moved back higher, tried to maybe retest that 1390 level, failed. That was a sell signal. The first one was a sell signal. This was adding to the position sell signal to a move much closer to the trend line, and that's where you got. That kind of lines with where this pretty important level of support should have been. It did not happen. You broke the channel support here. So where do we go, Darren? When you're jibber jabbering, where do we go? I think at the end of the day, because you did not hold 1340, it is possible the sell-off is not over. Because if you look at how the spreads traded, it was a liquidation across the board from March, May, July, August, Sep, Novi, you name it. It was a sell-off across the board. And the spreads didn't move much, so to me, that's liquidation across the board. On beans. Corn, different story. I'll get into that. So right now, where I think that this market could go, you're going to have to see follow-through first off. That's the first and most important thing. It's very possible we could see a retracement somewhere back towards this 50 and 62% retracement, which would put this somewhere around the 1290 level all the way down to 1255. I think that is a level where bulls would want to step in here, try to buy it. But right now, Sunday night's going to be key. You got to have follow through here for the bulls, or for the bears to continue this momentum down here. Keep in mind, I am looking for a larger correction. This could be the buying opportunity for guys wanting to try to get back in here. Now, keep in mind that the weather models out to Brazil look pretty good. I'm going to bring up the EMA out to South America. We are going to be looking pretty good, folks, as far as Brazil is concerned. And that's why I'm focusing on, Argentina. Argentina remains dry. Yes, Cordoba, Santa Fe may get some rains here, but the bulk of the growing region in Brazil is going to have some really beautiful rains to finish that crop off. So right now, it's not out of the question for Brazil maybe be a 132 million metric tons. That is not out of the question. You look at the rain over the last 24 hours. Again, nothing in Argentina here. Cordoba, Santa Fe remains dry. Buenos Aires dry. Mato Grosso do Sul, Rio Grande do Sul, getting some rains. Again, Rio Grande do Sul is probably in the worst shape of any state in Brazil, but Mato Grosso and Mato Grosso do Sul are looking very, very good at the moment. So if we look at the strategies that I sent out earlier this week here, we look at December corn. Now, some of you guys that want to be a little bit more aggressive and make some cash sales, make some HTAs, what I'm recommending today on today's break was buying the $5, $6 call spreads for less than 15 cents. Make the cash sale, make the HTA, look to reown. It's January 22nd. There's a lot of things that can still shake up here. And if only thing we're risking is 15 cents, 13 cents, we put it on pretty cheap today. That gives us upside from now all the way to $6. So be it. I think that's a great way of playing it. The other strategy, which was sent out yesterday, was buying the 450 put, selling the 520 call, and selling the $4 put straight out December. That would give us coverage, and I was putting it on for 5 cents. So that'd give us coverage about 45 cents of downside protection all the way till $4. So basically anything below this level, $4, we wouldn't be covered, but we would have upside with a floor at $4.45, upside where we would want to make a 10% cash sale at $5.20. Now, we still have a lot of time, a lot of patience. Obviously, we could not get a lot of those orders working here today, but with that being said, it's something to keep in mind. I will put it in the commentary below here. But with that being said, I will have some more details about my current thoughts on the markets in the commentary below here. But any questions, concerns, comments, anything that was discussed, please give me a call directly or text me 402-366-0423, or you can call my Chicago number at 312-858-3668.